All right. EWC, I did the tsx for Canada market review, I think this week, just a little while back. And now I'm just going to deep dive a little bit more of another instrument, a little different view than the tsx, the Ishares MSCI Canada Index Fund, tradable on Amex. All right, monthly candle chart, guys. Look at that. From 97, down, and that crazy stage 2 Canada had on the monthly. So from 2000, yeah, the bona fide breakout around here, May 2003. Getting close, never closing below the 12-month average. So if you would have done stage analysis, Stan Weinstein style, it's almost like a buy. I see stage analysis on the monthly as a buy and hold strategy or a short and hold, but with the opportunity to not live these drawdowns. How awesome is that? So if you're I'm long term, I'm a position trader, fine. Be intelligent about it. Grab a monthly candle chart, get a breakout, bottom, a base, with a weight of evidence, make sure everything's aligned, everything's in the in favor, and then after that you just ride for years, if possible. And if it doesn't, if it goes to a stage 3 and then a stage 4, then you're out, and then you just grab on to the next monthly candle defined stage analysis. Not my classic chart trading framework where I just measure implied moves and then and draw lines. You do it the good old-fashioned Stan Weinstein way. Like that. Oh, sorry. Seasick or chart sick. See, never close below. And then you're starting getting volatility. That's a sign that this could be ending. So for 2003, and when did we get the first close below? Gap below right here. And then you would have exited 5 years later. Then you would have ridden all those profits. Pretty good, right? So your risk would have been where you would have entered here. You would have put yourself stop maybe here. Look at this tool here. Long position. So let's say we entered. Okay, this is the worst case. Right here. Worst case, you close below, when you have a close below 12-month average. And here's the, let's say you would put yourself stop this far away. I don't think you would put it this far away. Probably put it here. So that is a risk to reward ratio of 8. That is pretty sweet. Very, very good. So every dollar you would have risked, you would have get $8 on the back end. 8 years later. Not bad. For a buy and hold strategy, right? Just to beat. And then after that, you don't have to live the drawdowns. You don't have to hold during those periods. And that is the beauty of it. Or you could even short it right here. Get a nice top. And the short, what's fun about the short is that it's fast. So you regain, I don't know, it came back down from here. This is 100%. This is what, about 70, 80% down. So it gave up almost 80 or 78% of its gains in a few months, in 5-6 months. And here it took you how many years? 5 years, and then 6 months went down. So you're allowed to play this monthly candle chart. You'll be able to catch that ride down super fast. Ooh. So buy and hold here, you would have been pretty much panicking. Somebody would have bought here, would have seen this, and would have said, oh my God, 5 years later, man, barely making a profit. Look at that. This is really, really bad here. When you see it here, you can't imagine it goes back here. You see your mutual funds go down, you see everything go down. But if your fund manager would have known stage analysis, he could have probably bailed right here. He had a few opportunities to bail here. Another close below 12-month average. He should have said, I shouldn't be here. It's dangerous. I'll wait till the price action goes back up and then play if it goes back up. And no, he made you live through a heart attack. All right. So what do we have? Let me zoom back. Where are we today? So anything is possible. Anything. These lows, we could get them. There's no reason why we can't give back all those gains. Even here, went up, stagnated for a few years, and up hit right here. You gave almost 90% of those gains. From here to here, you almost back at the breakout area. And then it took months and months to get just back here, and you didn't even make it. This chart, man, so funny. Check it out. Lower highs, lower highs, lower highs, lower highs, lower highs. Oh la la. Lower highs, lower lows, lower lows. Descending channel right there. Or at least from these points. Oh. All right, there you go. Okay, but let's see where we are today, guys. Ooh. Okay, monthly candle chart. Define breakdown levels. Right here. This is the top pattern. I see right here. Less volatility. Lower high already starting to etch downwards. I had another top pattern here. Break. Trying to go back down. Hitting some monthly defined support. Going back up. That support. Turn resistance. Bouncing off that. And that's sometimes when you see consolidation patterns off a breakdown line, it's because it's bouncing in between support and resistance, and it's trying to figure its way out. But the thing that happens is all the time you're staying below the 12-month moving average, you're not helping your case. It's starting to go downwards, giving you the pressure. And after that, Timberrrr. And for Canada, that really applies because we have a lot of wood. All right. So that's a 12-month scenario. Was the implied measure move? The greedy target is all the way down here to the bottom of the base here, and the least greedy target is just a little bit above. But the goal is, where are your targets? Are they going up or down? And right now, I'm closer to the downward scenario. I have my 12-month moving average going downwards. The price action is below. That's how I keep repeating myself all the time. My weight of evidence, really don't fight the trend. Just look at the details and what is it telling you. All right. All these scribbles. Ichimoku cloud going up, thinning because you're having sideways action. And now you're below the Ichimoku cloud. So we had a break below the Ichimoku cloud in October. Down. Consolidation pattern off that monthly defined support. Bouncing back up. Close to that monthly defined support and resistance. 30-moving average going downwards. Underperforming the SPX. Right here. See where there's that little high? Here could have been a... You had a good areas here. Here you could have had a good risk reward entry right here. This one here. This would have been pretty hard. I think as the week gapped up and then pulled down. So I'm not sure this would have been playable right here. But this is definitely a downtrend. Now it's a question of trying to find a good area to short. If we can't get a pullback back close to the 30-moving average, close to that important monthly defined wall, support, now turn resistance to protect us, to protect our sell stop, to give us the best risk to reward entry, the least risk, and maximize the reward, the downside, we could have to wait till we get a close to make sure below this level here. If we get a close below 26.15, the monthly defined breakdown line, if we get that close, that monthly defined closed, then we have our implied measure moves. They're going to be our swing rules, so you could play that. And after that, you could play the pullback to add positions. Once that goes down, if ever it hits those targets, if ever it pulls back close towards the 30-week moving average, close towards that breakdown line, then you get to add in a position. I think that's the safest way here, because anything could happen here. It could even actually go up a little higher, have a little thrust, and that could give you maybe another opportunity. Since you're out of the Ichimoku cloud, it's a clear sellings below. So either wait to get even closer to the 30-week moving average in case there's a thrust. They get that low, they get another lower high that's going to be settled here. Then I think you have to wait for that close, that monthly defined close, and that will accelerate. If you get a monthly defined close, I think it's going to start accelerate the down move towards the target. So I don't know how much time we have left. Who knows? Maybe a month, 4 weeks, 5 weeks, maybe more. I don't know. So just let the chart tell you when the market's ready, and after that, you'll be ready to go, guys. That's it, Canada. I love you. Ciao, guys. Yeah, please subscribe. Thanks.